And you know what that sound means. We're now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, top-down analysis style, as coaches over here at Tackle Trading, bringing you a veteran perspective about what's going on in the financial markets so you can better run your daily routine. And welcome back, everybody. If you are a veteran of the channel, you know what to do. Hashtag Team Tackle. As you're coming on in here, it always starts the conversation on a real great positive note. I love seeing that official hashtag that we have represents what we are as a community here. So hashtag Team Tackle as you're popping on in. And if you are brand new to the channel, coming on in here for the very first time, make sure you click subscribe, click the bell. We do this content each and every day. Whenever the markets are live, we go live at 12:30 p.m. Eastern. I got a fun full show for you today. Looking forward to it. We got Coach Matt, Coach Greg, and Coach Tyler here. We're going to have a segment later in the show we've been calling Buy One, Hold One, and Dump One, where Greg, you got 3 different picks that you're going to show us, correct?
You betcha.
Yeah. And first off, pleasantries to start the show, though, Greg. We should always do that. How you doing today, sir?
Doing very well. Thank you.
Fantastic. And Tyler, you got the screen shared there. How are you doing, sir?
Doing good. Market's bouncy this morning. I like it.
It's a little bouncy, a little Tigger bounce down here on the bottom. Matt, come on in here. Pleasantries first. Thursday. How you doing today, sir?
Tim, doing absolutely fantastic. Excited to be with my it's a great Thursday. I get to hang out with my boys talking about the markets and get to judge Greg later. It's fantastic.
That's exactly right. I love the segment where we get to judge. It's a lot easier. It's easier than getting your head chopped off on Tuesdays, Greg, from the Queen. So I
got a little of that last night there. I got the legs taken out from under me at Trade Masters. So I know how you guys feel. The problem is that Coach Mark was in cahoots with it. I could take one, but not both of them.
Greg, I had a line at minus 220 for a reason.
Mm-hmm. The fix was in. Just like the Derby this year.
Says everybody who lost a contest ever, by the way. The fix was in, but
the Derby, there might have been some fixes in the Derby. We need to see that. But no, it's excited to be here with everybody to break down the market activity and finally a rebound day in the market we get to talk about.
Let's talk about it. Let's start working through the markets one step at a time. And Tyler, you said we had a little bit of a bounce here off that 50-period moving average. I do like that line, Matt, right in line with what you were watching for potential catalyst here on the S&P. It found it at the cash open. We started moving higher overnight. We had a little bit of a reversal early in the morning there on the intraday. We'll take a look at that. But healthy development on a bullish day here after 3 days down, guys. First time we've had 3 days down in a couple of months as this trend's been really, really strong. Tyler, what are you reading here technically?
Well, look, the 50-day moving average is a common, we'll call it a gathering ground, an area where dip buyers like to congregate. And we've got some history here, right? History tends to rhyme. 50 days been the spot for bounces all year long, actually. In fact, post-November with the whole Pfizer vaccine-driven catalyst there. So nice to see that on the first test of the 50, we didn't break through it. As we'll see here in a second, how the market looks depends on where you look. But I think you have to be pleased with the performance on the S&P. The challenge now is going to be, as we get up to these old support levels, do we blast through? Does overhead supply come into play? This is the tricky part of when you get a bounce after the market breaks a decent support zone. There's always that question as to whether or not they're going to pounce on the rally or whether we're going to just power through. Damage has been done, so I tend to be a little bit cautious on these bounces. I think that the odds of follow through is a little bit less than on a normal pullback. But look, I'm pleased. And I think one other thing I'll say just real quick is volatility. We talked about this yesterday with the VIX spiking. When you get rebounds, they're pretty vigorous in a high VIX environment. So I think this is par for the course given what happened yesterday.
Mm-hmm. Greg, let's bring you in here second if we can. Just what's your read on general market conditions? We only get you in here once a week or so, but so I want to get your take on it. How are you approaching the market? What's your read on it right now?
Yeah, so everything Tyler said, 100% true. I look at this as more of a a dead cat bounce. We had some oversold conditions over the last couple of days in the intraday charts and things like that. So not really surprised to see a bounce today. Uh, I think you got to be real cautious because it's really not giving us the green light to go all in again. We do have some overhead resistance now that used to be support. You have to pay attention to that. For me, this increase in the VIX over the last couple of days, and the pullback with possible support at the 50, that just gives me an opportunity to look for things in the market that I want to buy anyway, and be able to get sell some out of the money cash flow type trades. So really, that's kind of what I've been looking at. I'm not keen on direction until I get some levels breaking. And I think the other way to go is to kind of say, okay, maybe this pullback is an opportunity to put some way out of the money type stuff in places that you really like to be. There have been some strong sectors as well, which is good, so you can follow kind of that path as well. But like I said, directionally, I'm kind of just pulling back a little bit right now, and just loving the cash flow plays right now.
Matt, what's your read?
Not a lot different from Tyler and Greg, quite frankly. I mean, you're talking about a market that has a little bit of mixed analysis in it right now. It's had a difficult time attaching itself to a theme in the market, and yeah, there's certain sectors in the market that are really, really good, and those sectors have been really good for quite some time. And there's nothing in the data, technically or fundamentally, to suggest otherwise. Talking about basic materials, finance, industrials, those cyclical areas of the market that were extremely, bullish from the election through the first 3 months, and then obviously over the last couple months as well. So we were looking at those sectors in even before this type of volatility ensued, but when you're looking at the market right now, and Tyler and Greg, both wonderful points, but let me just kind of reiterate kind of my reading of it. When you violate support, you're going to see an increasing volatility condition. And so a dead cat bounce when you're a little bit oversold in the short term coming into support it's not unheard of, and it's actually what should happen, right? And so what you're getting right now is it's coming into that support right there at the 50-day moving average. You got the backstop in the trend line that Tyler identified there right underneath the 50-day moving average. And what you have right now is the market's finding that level as a support level. And because you have still some concern in the growth areas of the market, the NASDAQ specifically, it's creating a volatile condition. But what I said yesterday kind of rings true. I'm looking at that daily chart to have the market find support. But then what we do is we shorten that time frame and we look at intraday analysis to really kind of, we now know the market has found support. It found support where we thought it was going to find support. Now it's a matter of seeing that intraday time frames get stronger and stronger and stronger. And throughout the trading day, if you look at kind of what transpired from the overnight action, you found support on the overnight action. You started building into the futures market when you start to see some life, right when those economic reports like the PPI report came out today. But right before the cash open, you started seeing a little bit more bullish mentality. And then the cash open came out. It was an extremely strong cash open for the bulls. And right now you're looking at this situation as a bull flag based pattern on the intraday perspective, and you're fighting up against a fairly important resistance level from an intraday. And if you can break out of that, yeah, we're still going to have some concern in the broad market. But as that intraday analysis starts to show higher highs and higher lows, all these technical traders are going to start putting into the rear view mirror the last 3 days and focusing on what's happening in the next 3 days as that starts building even stronger. So yeah, I certainly agree with Tyler and Craig that don't just chase the upward movement in price because we got it on one day. This was anticipated and expected. We got to see some follow through, but at least you got it. At least you got the support bounce, and at least you got the upward movement in price, and at least you got to the point where the intraday is solidifying itself so that you can start to see what you need before you take aggressive action. And I'm willing to bet, Tyler, you're looking at this chart today versus yesterday and saying, yeah, I might not love it today, but I hated it yesterday, and I'm much more ready today than I was yesterday.
Oh yeah, I think it brings back yesterday. It's like, all right, Bulls, like, where'd you guys go? I'm all alone. Like, usually you guys show up around this time.
Let's go golf and let's just get away from the market so we don't even have to look at it. Today,
Yes.
You're like, hey, if we can break out of this intraday resistance level, we got some action.
Yeah. It's reinvigorated my faith in the dip buyers. They're back, baby. They're back.
Well, and to Greg's point on the sectors, you take a look at the sectors, and even though the market's been focusing on the NASDAQ and the volatility that's been happening in the NASDAQ, you take a look at materials. Who isn't looking at materials right now and saying, "Hey, listen, it's go time"?
Materials looking beautiful. Look at these areas like industrials too. I mean, look at the industrials chart. Staples.
Finance.
Yeah.
And energy's got some chop towards the top, but give that a couple of days to shake out. The concern is still the concern, and that is in the quite frankly, the text-based and discretionary.
Mm-hmm. Mm-hmm. Well, and speaking of those, Tyler, why don't you run through a couple of the other indexes? And I love the point on the sectors there, Matt. Obviously, there's still some pockets of strength. There's obviously pockets of weakness. We're getting that separation in these charts, and there is a changing character in the overall market. So caution's fair, but I'm cautiously optimistic with the bounce here today. Tyler, what about the NASDAQ?
And again, just very quickly, just to kind of give my point again, look what the NASDAQ did on the 50. It had a very aggressive, buyback over 2 days, and it came right back into resistance and got smacked back down.
Mm-hmm.
Yeah.
That's the caution that Tyler and Greg is talking about, because that's what the S&P is doing right now. It is fighting back up against that resistance. My point is, number one, we're talking the S&P and not the NASDAQ.
Mm-hmm.
But number two, you just got the analysis that if it does break out, you're back at it.
Mm-hmm.
Yeah.
Whereas yesterday we're like, just don't break. Please don't break.
Yeah.
Yesterday it's let's go
mentality.
golfing. Yeah, that's exactly right. Tyler, give me a full read on this NASDAQ if you can, and any of the other indexes that are grabbing your attention.
Yeah, I mean, so the takeaway here is that strength has continued to be strong and weakness has continued to be weak. Growth has been the area that's been under pressure for quite a while. And yeah, this broke the 50. Matt made a great point. I mean, this is what the S&P will look like in 4 days if buyers could just completely fumble. Okay. But I doubt it, because the thing is the S&P has these other sectors.
Yeah, it's
being
got too
pretty
many
good weights, right? So you'd have to see them come after industrials and financials and all these other guys.
It would look similar. It just wouldn't be as volatile, but it would look similar.
Yeah, and quite frankly, it would be unfortunate, because it means all these good-looking sectors, their trends, this bounce will have failed. It'll be ugly. Let's not even tempt fate. But it's a good point. Like, this is what you don't want to see in the S&P. And this is the type of sell-off that's harder to buy the dip on than an industrial, a financial, a basic material. Mm-hmm. So, I mean, for me personally, I'm pretty aggressive. The only thing I'd be entertaining in tech is if we get way oversold and I get to sell some out of the money puts like Greg talked about. That would be the play here, certainly not directional. But I'm not surprised that this is the one where the rally has fizzled the most. Like, if you look at the Qs, I think you can see it a little bit better. Yeah. But I mean, you could see we didn't take out yesterday's high. Intraday, it's a little messy. We still have a lot of time, but the initial reaction to sell a rally is not surprising. That's why rallies are suspect when you're below the 50-day moving average. So of all the indexes, this one has the most work to do before I think bullish directional trades are attractive.
Mm-hmm. What about your favorite, the rut, when you're ready? Yeah,
so the rut, look, I'm happy it held support. This was down like 3.25% yesterday. It was ugly. Small caps are the riskiest area of those three indexes. The smaller companies tend to carry the most risk. So it's not that surprising that on a risk-off day, they really torch small caps. I think you really do want to see this hold this 2100 level. I mean, if it doesn't, then you have basically a 3-month popping pattern. It won't be a good look if it breaks 2100. So I'm happy that this is bulls are putting up a fight here at 2100. If this fails, I mean, this goes along with the NASDAQ where it's in the doghouse and I don't like it. Mm-hmm. So we'll see. Good start, but I don't want to be too bearish on the Russell unless it cracks at 2100. I think this is a key test here.
Yeah, key support there over a couple of months. That line in the box that's been in there for a while is obviously being tested. But guys, we're having a little bit of a bounce day here today, and I appreciate all the insight and analysis on what's happening in the markets. Anybody want anything else on equities before we move into commodities? We good? Okay, let's go through commodity market next. I do want to talk about that economic data that came out a little bit later. Crude oil first, hesitating at resistance. Let's start with the technical read here, Tyler. That's kind of a fat red candle right here at resistance. What are you seeing?
Yeah, 4%'s a little, maybe the biggest red bar we've seen actually since this thing bottomed 6 weeks ago. So yeah, a little tussle with resistance. So far impenetrable. Can't get through it. If this closes below the 20, I mean, it is a slight change in character because, you know, the ascending trend lines here have been pretty on point. Try kind of breaking below that. I mean, we'll see if this is intraday noise and it pops back, but that could take the wind out of the sails of energy for short term. I don't know, a day, a couple days, we'll see. But I don't want to see this take out the 50. If so, then we're more range bound behavior than this nice uptrend. Maybe, I don't know. I don't want to read too much into this, but yeah, I don't like today's down move. Energy is a little bit weak. Let's watch the 50-day and see what happens. If it breaks that, then we can be a little more pessimistic.
Resistance is resistance for a reason there, Matt. Do you also see the changing character here in crude?
In crude?
Yeah.
It's a slight change in character, yes, but also I'm not surprised in a volatile moment for the market. Not today. I'm just talking about the market volatility, right? That resistance holds and crudes get sold. Like, that doesn't surprise me. It's crude.
Yeah. Resistance held here for a day, and obviously support's going to be tested.
I have for Tyler on crude is, does the increasing volatility and the concern on crude today, does it change your opinion on the breakout?
No.
And it doesn't for me either. And that's why I say, yeah, there's a slight increase in volatility, but if crude stabilizes, like, you're still looking at that breakout and you're still saying that breakout's tradable.
You know what really ticks me off, Matt, is I didn't want to have to redraw lines. Okay, these lines have been.
I don't like redrawing my boxes and my lines. I hate it. Yeah. It makes me. It's always a subtle reminder, like, maybe I need to get better at technical analysis.
Look, yeah, I can see a month into the future, but much beyond that, I got to start changing crap.
Yeah, no, I'm with you. I'm with you there. I get annoyed when I have to adjust my lines there too. But again, the point on crude is tough day, no doubt about that. But again, it's not the first time we've seen a sell-off on crude when it's hitting resistance at an elevated price threshold. That's why we're analyzing the breakout.
Yeah, and that breakout line is still up there intact, so you don't got to redraw that one quite yet, Tyler. Maybe that trend line though.
I'd like to attach a couple of those wicks, but
yeah. All right, next one here, gold. Let's take a peek at that. Having kind of just a hesitation day. Obviously, as we've been looking at this each and every day as the trend has been developing here. Matt, we banged into that resistance up there, came back. We've now kind of had a couple of days of chop back and forth. The down day yesterday, the up day here, but the higher pivot high, higher pivot low is intact. Anything on gold you want to give us your insight on?
I think it looks healthy.
I do too. Yeah.
Sorry, Tim, real quick.
Yeah.
When I was looking at GLD, GDX, SLV, they all look pretty good here today. So I think this is. I
mean, it's going to be interesting on that breakout when it does occur, and I say when it does occur because the analysis leading into it looks really good.
Greg, you love the metals markets, like most of the coaches that I know, most investors that I know, quite frankly, you love the metals markets. What's your approach to metals here in general lately as this trend has been developing?
Yeah, so I think Matt's been saying this for weeks and months now, but with this here, I love the pullback. Like even yesterday's pullback here, and right to basically a support level there. Tyler doesn't have it on his charts there, but it's just hugging that 9, which is amazing as well. As far as I was concerned, that was just another opportunity, at least for me, to get more cash flow plays involved. So it's fun that it's not going straight up. I don't mind these pullbacks because they're kind of like secondary and thirdary opportunities to add to positions here. I still like this. I'm not surprised that we're seeing a little bit of resistance here. I expect we'll probably see a little bit more at the 200 there, but I'm waiting for that break above the 200. I'm looking so forward to that. I still think the case for gold is, they're talking about inflation. The numbers came out, what were they, the worst since 2008 or the fastest or something for inflation rising since 2008 or something. So I'm not really surprised to see the strength in gold. And this is really just pausing right now, building up some energy. And who knows, maybe we get that take out of the 200 quicker than I expected. So.
Mm-hmm. Yeah, healthy development. Did find that 9 EMA interesting that you approached it just with a cash flow opportunity at that point. That's the way Coach Mark would have done it as well. I like the directional development on that potential breakout if and when it does happen. So I love the chart, love the development. Let's keep moving through the markets. Go to the dollar next if you can. Greg referenced some inflation data, Matt. We did see PPI come in and surge again following a day after the CPI came in and surged again. I have a feeling we're going to hear these type of phrases. The highest since this year, the highest since this month, the highest since this year. I got another one of those. The highest surge since 2010 is it was 6.2% year over year, 0.6% on a month over month basis, more than double what analysts expected. We know prices are going up. The Fed keeps, with their, there's no inflation. And even if there is, it's transitory at this point. What's your read here, on the dollar and that PPI report in general?
Well, the PPI report is transitory. It transfers from the PPI report to the CPI report. So good luck with that one, Fed. Mm-hmm. Pretty big increase in inflation on the CPI report, on the PPI report, following a fairly big increase on the CPI report. There's nothing in the report that the Fed is not going to use the transitory language, though.
Yeah.
And once again, they're wrong.
No, they're 100% wrong.
Period. End of sentence.
That's it.
They're wrong.
Yeah, I agree.
No, I'm not going to go into the why they're wrong today.
All right, fair enough.
No, I do that every other day. No, I'm good today.
Yeah, all right. The dollar obviously hesitating in that little bit of a downtrend. We'll see, how that trend develops, if anything. Had the one bounce reprieve day yesterday, but here we are, still ugly in my opinion. All right, last one is Bitcoin here. Let's take a peek there. And Tyler, I'm going to need a technical read here. Obviously, we've got some support down here. Did you hear the news, Tyler?
I'll give you a technical read. I told you so.
You can't do that at 48,000. You can't.
It's still got some support down here and going to have a test in a fight.
I did not hear the catalyst, though, no.
The catalyst was Elon capitulated.
All right. 3 months ago, or
this
whenever
is going to trigger a rant from Tim.
It sure is.
Let's hear it.
All right. Elon Musk decided to flip flop on his position on Bitcoin. Kind of. I say that kind of because
he was never committed in the first place.
That's exactly right. Who knows exactly why he got involved in this whole thing for the whole time. Crypto people like myself, and Matt knows this about me, have been ranting and complaining that Elon has somehow become the poster child and the figurehead for crypto because he doesn't really know everything about it. Number one, he's very uninformed, and he's also
he attaches his name to storylines.
He's become
it's annoyingly transparent at this point.
Yeah, he's like a Kardashian. I don't. Bitcoin.
All flash and no substance there, Tim.
That should have been last week. That could have been a fantastic Saturday Night Live sketch.
That's a hot take right there.
Elon
the Musks.
He came out and said that they no longer will accept Bitcoin as payment for their cars, their automobiles, or their services and products because Bitcoin has an environmental impact that he's not comfortable with, this and that and the other thing. Okay. Tesla is the leading EV car brand in the world in terms of perception and all that kind of stuff. How does the CEO of an environmentally friendly company not understand the environmental impact of Bitcoin? I'm smelling some smoke.
It's a wonderful question that you and I both know the answer to. Yeah. Of course he knew it. He runs a $600 billion empire. He's the third richest person in the world. He has a team of researchers that tell him every impact to everything. He tried to attach his name to a storyline. He does it all the time, and crypto traders hate it. And yes, Tim, you've been in the crypto market for now 8 years.
Yeah.
8 years. It's annoying to the veterans in crypto. It just is. It's stop attaching your name, because all it does is shift the volatility. That's it. All we see is increasing volatility.
As a non-crypto guy, can I throw in my conspiracy theory now? So didn't he come out I don't know, I want to say a month ago or something, and say he was investing 1.6 billion whatever dollars into crypto, and then it skyrocketed. And now this is just him going, yeah, you know what? Tesla's not going to take this crypto anymore. And then a month from now, when the price is back down to 40,000, he'll be buying up another 1.6 billion of it. And all of a sudden Tesla will be, hey, we're taking Ethereum or Dogecoin or whatever the hell we're doing this week, you know?
Greg, he didn't buy this 6 months ago. He probably lost, like, either broke even on it, lost maybe a little bit. Like this is kind of a non-story that Elon tried to make a big deal now.
So Tesla did liquidate their Bitcoin position?
No. So he said he's going to hold his actual 1 billion or one change in Bitcoin. He's just not. In fact, he didn't say he was
just not taking your Bitcoin.
He's just not taking new Bitcoin. That's right.
Then what's his justification for having Bitcoin on the balance sheet if it's not going to use it to transact?
Because he wants to be the techno king of crypto.
Dude, this Saturday Night Live appearance, I think, might mark a moment for old Elon Musk here, that we remember that when he became kind of a caricature of himself. But maybe I'm real negative Elon here today because I'm tired of him spouting his mouth off about the crypto markets.
Well, yeah, your positions are down pretty aggressively because Elon's playing a game here.
Yeah, he's messing. Yeah.
And how many people actually bought Bitcoin because Tesla was accepting Bitcoin to buy a Tesla? I mean,
more than you think.
Yeah, apparently so.
His following is massive. It truly is impressive, his following, more than you think. But again, what I've been seeing lately is anytime Elon attaches his name or Tesla to an instrument, all it does is create volatility.
Yeah.
So all of that being said, because I could rant for hours, but what do you see in this chart now, Tyler? Because that is an ugly, ugly candle. We knew it had moved into this box. We're still in the box, officially. You still have some support that we're going to be testing and pushing towards here. But you got an uptick in volume, an uptick in volatility, a big down day, 10%. How do you read this? How do you unpack it?
I mean, look, if you've been waiting for a big dip in crypto and Bitcoin, maybe you're pleased, right? Maybe you're like, hey, good. I don't care what the catalyst is. I wanted this down at 30K anyways. When you get a big, massive candle like this, it's impossible to trade the day of. There's just nothing to do here. You have to wait and see how this shakes out. Last time we were down here, we popped pretty aggressively. But maybe this time's different. I just think you need to wait for more candles to have a better feel here. Piling in right now, hoping that support holds, just seems like a low odds bet. For me, this is a wait and see. And based on the way it's been behaving as well the last month, I don't know that there's an urgency to snatch this up because it's not going to come down here again. It just seems like the trajectory shifting a little bit. I think you can afford to be patient. Let's see if buyers show up here. If they don't, maybe you get a bigger retracement. So in the long run, it's probably buying opportunity. In the short run, I don't want to be a hero here.
Matt, anything you want to add to the Bitcoin chart here?
Still in the box, but it's threatening to violate it. And if it violates it, the 30K is not out of the
No, it's
analysis, quite frankly.
Yeah, it's completely in play. Yeah, that's how that's Bitcoin, by the way, guys. You know, as a veteran of the crypto markets, you're going to have volatility in these markets. It always has been there. It will continue to be there and until it grows up even just a little bit more here, down 10% today. All right,
I know, Tim, but I'm sorry, I don't want to come across as all negative towards Elon, but I'm sorry, when he's done this in the crypto space, the buyer's mentality, it lasts intraday.
Mm-hmm.
That's all it does. And then the volatility comes through it. Like, again, Elon, focus, save the world. You don't have to attach yourself to every storyline.
Yeah, that's exactly right. Come on, Elon. All right, let's move into stock talk here. Just a couple of news items actually today. Most of the news is on the broad market indexes, the bounce in the market. But I did have one or two stories I want to talk about, and then we're going to play that game: buy one, hold one, and dump one. And I think, Greg, you've got three picks ready to show us here in a few minutes. Is that right?
You betcha.
All right, quick look at Alibaba if we can. You know, obviously the big Chinese tech giant, they've been under pressure here for the better part of 6 months. All kinds of storylines during that 6 months. Jack Ma, you know, maybe even disappearing in the fall. Obviously, he was not. He was on vacation. Company under pressure here today after reporting their earnings of 1.58 EPS, missed against the consensus mat of 1.7. The revenue came in just a little bit above line. It was a nothing burger, not much to see there in the report. They kind of blamed the miss on having to pay some of their antitrust fines that they've been responsible to pay over the last quarter. Chart's ugly here. Matt, anything in Alibaba that gets your interest at all, first of all? And then Tyler, I want to get a chart read. But Matt, anything interesting here?
No, I'm definitely not interested in Chinese tech right now.
Yeah, it's been completely out of favor. Tyler, this is completely ugly there. It's breaking below support. What's your read on the chart?
Yeah, this has been a hard instrument to trade too. I mean, just littered with gaps. It's almost trading like, I mean, it is an ADR, but it didn't used to gap this much. I feel like it's tough,
Before
man.
the pandemic, Tyler, it's an ADR, but it felt like you were trading any other instrument.
Correct. Yes. I mean, when you go back, you didn't have as many. It was fairly easy to trade. I think I think that first of all, it's a tough trading instrument to begin with. Second of all, yeah, it looks like garbage. I mean, how do you feel when the S&P is a couple percent off the highs and your stock's down, 40%? Doesn't feel good. And when you have terrible earnings like this, it tends to hang over the stock for a spell. I mean, oftentimes it'll wait till the next quarter to see if whatever is hampering their earnings goes away. So I think you're patient with this thing if you're trying any kind of bottom fishing. Way premature. On the bear side, I mean, this is a fresh support break. So I wouldn't have faulted somebody for looking for new entries on the short side under support here. Sure as heck wouldn't buy the thing. So next support's around 190. You got $17 to the downside. I mean, who's to say it can go back down to 170? Wouldn't that be interesting? A round trip back to the pandemic lows. Hey, nothing says you suck like being back where you were a year ago in this environment.
Yeah, that's a good point. And Chinese tech has been under a lot of pressure. A lot of these companies coming back down towards lows they hit last year. So Alibaba is no exception. And then one quick one here. I saw that Lowe's caught an upgrade by Oppenheimer to a buy rating. I don't know if I'm impressed by the analyst calls pre-earnings or not. I don't see this from a technical perspective, but they love the fundamental outlook of the cyclical reopening theme, and people are going to want to go back out there and all that kind of stuff. They like Lowe's in this sector as well. Upgraded to a buy right in front of earnings. Matt, when you see an analyst upgrade right before earnings, does it give you caution? Do you give them credit? What's your read on this? And do you have Lowe's as a buy as well?
Man, they got courage. You got to give them courage.
Yep.
I would like to see the earnings numbers after a quarter to kind of see exactly what those raw numbers are. Can they justify it? How the behavior is going to change around those numbers? I personally would like to see the data before you would upgrade, downgrade. Lowe's is obviously it can attach itself to a cyclical reopening theme, but not to the same extent as some of the counterparts, in my opinion. In fact, Lowe's was a pandemic play as well, guys.
Mm-hmm.
for a long time, Lowe's was that pandemic play as well. I know we have short-term memories now, but it wasn't too long ago, every one of us were buying materials to do stay-at-home projects, right? And that was the entire analysis of why Lowe's and Home Depot and all those were great pandemic plays. So I don't know if I have the same reading on Lowe's from a, industrial cyclical type environment. Could it perform similar? Yeah, but I don't have an upgrade or anything like that. Technically, tough pattern to trade, and you're right in front of earnings. So no, I wouldn't have upgraded, but I'm not going to fault.
I would have kept it neutral, waited for earnings. But
as long as what they're really doing is they're attaching Lowe's to a cyclical movement, and they're attaching that in their upgrade. And you can loosely do that.
That's fair. That's fair. Maybe one or two last ones. Amazon is hiring 75,000 new workers and obviously expanding. The stock has been stuck there in that range for quite some time. Looked like it wanted to break out, Tyler. Now it's very, very neutral. They're also going to pay a $100 bonus if you get vaccinated to get that job. And then one last one, Walmart. And this one will be a quick one as well. Walmart's moving more online all the time. We've seen it with their deliveries last year. They actually just acquired a new company. I got to get the name right. Zekit, I think is how you say it, which basically, Matt, you can buy clothes on walmart.com and you'll be able to virtually try them on your body to see how they look. And apparently it's a pretty cool little app and software, just as an announcement for them to continue to expand their online sales presence. Tyler, Walmart's got earnings next week, so there's not much in the chart we need to analyze. So let's get into the buy one, hold one, dump one segment of the show. And Coach Greg, let's set this up a little bit here. We've been doing it for about a month and a half. I can't remember exactly the very first time we did it. It's a fun little premise. Coach Greg is a long-term investor. We call him Old Money Homes for a reason. And he brings 3 different companies to the show to show us some fundamentally sound ideas, whether they're dividend plays or whether they're within a sector or a theme or a space. That's up to Greg on what he wants to find that week. And then we get to decide as the coaches, we're the judges this time, which one we would buy, which one we would hold, and which one we would dump and throw it into the trash can. So Greg, you're up. What do you got for us today?
Well, this week I'm trying something a little bit different. I'm churching this up a little bit. So typically we've been kind of looking at value and obviously the fundamentals, and we're still going to look at that. But what we're going to add in a little bit this week is we're going to add into a little bit of growth data as well. And we'll see if that changes any tunes when it comes to picking certain things. Now, this week's picks are in celebration of XLB and how well it's doing, the material space this week. So I think it actually looks like one of the better setups overall. I picked out 3 in the specialty chemicals area. So they're a little bit higher dollar stocks, but fundamentally we've got some solid stuff to go with it. We've got some growth numbers as well. And we're just going to buy one, dump one, and hold one. So without further ado, I've got some data here. I'll just read them off. Let's go, Tyler, with PPG first. If we'll do the technical read, and then I'll read off the data that I got here. So had a little bit of a pullback, really not that much with what we saw there. Came right down to the 20, as you can see there, kind of stuck the landing, and it's trying to claw that back today. Really good post-earnings gap after that. Not filling that gap anytime soon by the looks of things. Just a really solid chart here as far as I'm concerned. That bounce off the 20 looks pretty attractive for this one. So PPG from a fundamental standpoint, what I did was I picked up just a bunch of metrics here. So I'm going to give you the price, the dividend yield, the dividend increases, the year they started it, the payout ratio, the price to earnings ratio. I'm going to give you sales growth for the year and projected sales growth for next year. And that'll be the criteria that you guys get to choose from. So PPG is about $173. Not sure what it is right now. What do you guys got there? I can't see that price. 177. So it's up a little bit, obviously, today. So when I did this, it was a little bit down earlier. So dividend yields 1.24%. 49 years in a row, they paid consecutive dividend increases. They started paying dividends in 1899. Their current payout ratio is about 43%. Their PE ratio is 35. Now, the sales growth numbers that you guys can take into account, they're at 19.9% sales growth for this current year, and their expectation next year is 5.9%. Okay, so that's your criteria to kind of whittle down the stock to see which ones you like. So that's PPG. So the next one we're going to do is APD, also in the same space, Air Products and Chemicals. So a little different chart here, recent breakout, kind of high basing again by the looks of things, but not back at those highs like we saw with PPG. Just, kind of lagging a little bit, it seems, but just went through earnings. Not too bad on the earnings by the looks of things there. Just not being able to reach those previous highs we saw back in November. So chart wise, more neutral than bullish as the last one we looked at. So APD, their numbers stack up like this. You guys can see the price there. I've got about 293, is probably a little different than that. Their dividend yield is 2.05%. 38 years of consecutive dividend increases. Started paying dividends in 1954. Their payout ratio is 65%. Their PE ratio is a 34. Current sales growth is 11%, and their sales growth next year projected is 8.1%. All right. So that's the second choice. And then the third choice is Sherwin-Williams, SHW. So all big dollar stocks, they're all in the same space, specialty chemicals, similar businesses, not the exact same, but similar businesses. Obviously, you can see what's happened here. Very strong, nice little 3-day pullback there, just blasting off again today, actually above the high from yesterday. So a pretty decent retracement here on this one, showing lots of strength with this one. Numbers wise, it looks like this. Dividend yield of 0.79%, 41 years of consecutive dividend increases, started paying dividends in 1971, great year, payout ratio of 73, and a PE ratio of 109. Their sales growth currently is 8.1%, and their expected sales growth next year is 4.7%.
And
so those are your numbers, gentlemen.
Real quick on that PE ratio on Sherwin-Williams. I had consistent numbers on the other two. I have different on that one. Tyler, can you look up the PE for Sherwin-Williams so we can have consistent analysis on that?
I took the PE numbers from the same place. So if they're wrong,
always,
it is what it is. Yeah.
Measure twice, cut once, right? It's always good to look it up. Yeah, on I've got it a couple locations, about 36.
I have a 36.
Yeah, I got a 36. So 36 PE on Sherwin-Williams. Okay. And now, what was the sales growth projection you had on Sherwin, Greg? Real quick.
Sherwin was currently is 8.1%, so that's this year, and next year they're expecting 4.7%.
Okay, all right. Back on the chart. Who wants to go first here? I'll go. I personally, looking through the data, looking at some of the fundamental metrics and considering the charts as we were going through 3 of these, I like the fact that 3 are in the same sector here, Greg. It's going to make it, for some of that analysis where you can cross compare. I've got a dump. I'm going to start with the dump, and I'm dumping APD. I understand the dividend payout is a little bit higher. I understand it's got a little breakout potential here. That $300 breakout, even on the daily chart, might be in play, but it's been underperforming relative against the other two for quite some time. Relative PE ratio, relative sales number. The dividend's not going to be enough for me to take that chart over the other two. Okay. So it comes down to the other two for me in terms of which one I would prefer to buy and which one I would hold. And I think what I would do is I would hold the first one, PPG. Give me the chart on PPG. The dividend ratio 1.24 is not that much higher than Sherwin-Williams, but it is about a half tick higher than that. There's a little subtle rolling over there. Breakout is definitely still in play. I see it, but I liked that Sherwin-Williams chart as a buy the most personally, just from a technical perspective. Fundamentals seem to be very much in line with each other in many regards. I can't wait to hear what the other guy's seeing in that because I'm not seeing a huge difference. But the Sherwin-Williams chart on the daily, I like the retracement. I like the price response. And with the other things intact, this one has been a leader in terms of performance and trend. So I'm buying Sherwin. I'm holding PPG. I am dumping APD. Matt, let's have you go next.
I was hoping Greg would pull up my favorite chemical company. I'm gonna hold Sherwin in this example. I'm gonna hold Sherwin. It's a popular brand name, highest market cap company in the U.S. in the chemical space. The 36 valuation is slightly high for the chemical space, but not to the point where you're concerned fundamentally, and not against some of the chart concerns I have on APD, which means I'm dumping APD just because it would be a little bit more difficult to manage from a technical perspective, which I personally like to do. So I'm going to dump APD, and the technical trigger on PPG above 180 looks pretty legit. On that, but I'd be looking at that more as a swing trade from a breakout perspective. So looking at that as a buy, Sherwin's a hold for me, APD's a dump, and PPG is a buy. My favorite one though is LYB. It's fundamentally to me head and shoulders above the rest.
Mm-hmm. Mm-hmm. Tyler, what about you?
I think with Tim, I like the interesting thing on the dividend yield. This is why it's a little misleading if you look at just the yield. I mean, you'd say, oh, APD is 2.05% yield. Sherwin-Williams only 0.79. If you looked at that in a vacuum, you'd take APD. But the reality is part of the reason why Sherwin has the lower yield is because its stock price has done so good, right?
Mm-hmm.
And so sometimes you look at yield to the exclusion of growth, and you'd be better off looking at total return. So I don't take the lower yield on Sherwin-Williams as a negative. I think it's just a byproduct and a reflection of how good the growth has been. I love this long-term chart too. I mean, it's just had a 3-for-1 stock split. So I mean, this sucker was $750. So you think it's high now? Imagine had it not split. So I like the story. I like the name brand that Matt mentioned. Sherwin-Williams to me would be the buy. And PPG, I like the long-term chart as well. I think it's easier than APD would have been. So yeah, I'm hold PPG, buy Sherwin, and dump APD.
All right, Greg, what would you do? I mean, now this is always the fun part of the segment at the end. How do we do? Do you agree with us?
Not exactly. I do agree on some points and others. The reason I wanted to throw in the sales growth data to kind of church this up a little bit was just because I kind of had a feeling how you guys would look at this, from a certain perspective, because I know you guys are very much consider growth in all your decisions and things like that. And so that's kind of why I wanted to bring that little extra aspect to it now. Obviously, I like all of these companies. They've shown some strength. I actually like APD for a couple of reasons. Obviously, their dividend yield is higher. It's not great, though. It's not like you're shooting the lights out. But what I did find interesting, and you guys did point it out, was, their chart isn't as attractive, right? But as far as I'm concerned, I think they've still got more room to run. Like I said, I feel like they're looking at for a breakout of the 300 there, where we're sitting right now. But even their sales growth projected next year, this year they had a little bit better sales growth than Sherwin, I should say, which obviously is reflected in their stock price already. Same thing with PPG, had a very good growth this year, but the projection going forward, and again, you have to take that with a grain of salt because they're just projections. But you can see that we're almost double what Sherwin-Williams is expected. So when you start looking at the stock prices, okay, if some of that growth is realized, then I think you could get a better run, and you'd still be collecting that higher dividend. So for me, I would hold APD. I do like Sherwin-Williams, but I'm a little bit concerned that maybe it's gone a little too far. And if I was looking for a growth component, I would probably stick with PPG. Like I said, I do like their dividend yield is somewhat decent. They've got they meet all the fundamental metrics for me. Plus, they had good sales growth this year. It looks like they'll have some decent sales growth next year. And for me, that would be my buy. And then I would have to dump Sherwin-Williams just because I kind of feel, like I said, they've run really, really well. As Tyler said, they stock split, which they could go back to 700 very, very easily. But I think that's the one I would dump out of this bunch. for those
Not
reasons.
surprising to me that the old money homes likes the dividend play, the higher dividend yield. I get it. But obviously, a difference of opinion on that one, Greg. That's okay. That's why we buy one, hold one, dump one. We all got our own take on it. So thanks for bringing those three stocks to the show and the analysis here. Much appreciated as always. And out there, Team Tackle, always curious what you guys would do. Which one would you buy? Which one would you hold? And which one would you dump? Let me know in the chat. Guys, that's it for our show here on a
Very
Thursday.
quickly.
Yeah, sure.
Just very quickly on the chemical space. Love the chemical space, Greg. Thank you so much for the conversation. Chemicals have been really hot. Just want to remind people the best chemical company is the one on dividend fireworks, and that is LYB. Even despite the very consistent trend, fundamentally, LYB still has very, very proper valuation.
It's a beautiful little pattern too, developing actually.
Yeah, I didn't see that one. Otherwise, it would have made the list.
Yeah, LYB is the most consistent for me from a cover call perspective, and it's in a price threshold that's probably a little better for cover calls too.
Yeah,
for sure.
Yeah. I'm going to drop the link to the Tackle 25 list there for Pro members in the chat, so you guys can go and review some of those dividend fireworks, including LYB, which is right there on that list. All right, guys, let's move back on the S&P 500 to start getting some final thoughts here today. Let's start with Tyler. Tyler, what's your final thought for the team out there?
Final thought is, we're not. Look, Rut's back down to 0.5%. What so far? This bounce is dead cat like. I'm a Greg. Let's see how they close this thing. Maybe it would have been too easy to have 3 big up days after those 3 big down days. Damage has been done. I would just be cautious. I'm not trying to be a hero here. I like what Greg said earlier. Cash flow plays over directional until this little correction works itself out.
I think that's fair. Greg, final thoughts from you?
Yeah, I really can't argue with that analysis since I kind of talked about it earlier. But I think he still exercised a lot of caution here because really, we haven't been shown any reasons. Like even with this dead cat bounce, we're running into that resistance above us there, which was the old support, less than a month ago. So caution on the direction for sure, but pay attention. You know what I mean? Like if we can start to make some strides, maybe tomorrow, being Friday, whatever, maybe we get a little above one of those the 9 EMA there. Then I might be more inclined to look at some direction. But right now, I think there's still really good opportunities. Look at the companies that you really like, and there's probably still some cash flow opportunities available with this heightened premium. So that's the area of market I'm focusing on right now, and I still think still think there's an opportunity there. So,
Matt, final thoughts for the team.
Technically, we talked about that 4100 by 4120 level acting as a support level multiple different times in the halftime report, and for us at Tackle, when volatility does arrive, we like to live on intraday charts. And Greg at the very beginning of the show mentioned the technical pattern dead cat bounce, and you're in that time frame where you could see one or the other, right? And when you're looking at the intraday data right now, as we're been talking in the halftime report, the analysis does lead to a dead cat bounce here. You're looking at a cash open that was very strong, but that's the only thing you've seen strong today is the cash open. You had a very strong cash open. After that, the market's been in fade mode, and now you're violating some support levels. And where is it finding that resistance? Exactly where Tyler and Greg talked about, the daily historical support, which is now acting as resistance, 4100 by 4120. You're now seeing the market test that zone, and at least for the first test, and again, we could have multiple tests here, but for the first test, the market seems to have failed this test, and that's why you're seeing a little bit of volatility come right back down to the downside, and the market's puking up the gains it made on the cash open. So the uncertainty and volatility, we had an hour where we were hopeful, and now we're back into wait and see mode.
So wait and see mode, no question about it. And, obviously that's why intraday analysis is so important on a day-by-day basis. Glad we went down to that 5-minute chart here, Matt, because even just as we're closing the show, that changing character is definitely apparent there. All right, guys, that is our show for Thursday. Oh, go ahead.
Honestly, if the buyers had belief, they would have pushed it. They would
higher.
push it on the bullish retracement on the intraday after a positive cash open. They didn't do it.
Yeah, they're giving that up right now. All right, guys, we will be back tomorrow on Friday with Coach Frank, as we always are. Tonight, we do have a cash flow club. Coach Gino has been eagerly anticipating teaching this cash flow club and talking to us internally all week long. I'm going to be talking about some ideas around management of cash flow strategies in the money cover calls, things like that. So do not miss it. If you're a pro member, get with Coach Gino tonight, 8:30 p.m. Eastern time. And if you are not yet a pro member of the tackle trading community, I did drop the link into the chat here in our YouTube channel, and it's also in the description of every one of our videos. Come and join us on the back end, see what we're doing in terms of providing education and community for our traders out there. So have a wonderful day out there, Team Tackle. Until then, we'll see you tomorrow.